The first Amex card didn't exist till 1958. The company was over 100 years old by that point, right? So the iterations of how we've grown, I think it's really important for large institutions to both partner with and respect fintechs and startups. I think it's critical. A good mentorship relationship is one that goes both ways, I think. People always think about, well, if this person would mentor me, here's what I can get out of it, right? But I would always ask them, well, what does the mentor get out of spending consistent time with you?
So welcome, Anré. Thank you for stopping by the Fintech Leaders podcast.
Sure.
Truly means a lot. Let's get started a little bit with your story, because correct me if I'm wrong, but you've spent the last 35 years at Amex.
That's correct.
When you joined, the company had a market cap that is less than 3% what it is today. Mm-hmm. And that's not really truly representative, because you spun out, I believe it's AmeriCorp and
yes,
a bunch of other
Ameriprise,
I'm sorry.
American Express Business Travel.
Yes.
And sold off a few other companies.
Yeah. So it was just a pipsqueak compared to what it is now.
That's true.
So tell us about that journey, and you have a lot of interesting stories to share and lessons that people want to learn from.
I guess 36 years ago now, wow. Our first interaction with American Express, the company. Spent 35 years working there full time. I'm still there now, although it was announced I'm leaving in November. But it's been a great ride. It's a wonderful company. We've done a lot to try to grow. But the company's 175 years old. And during that 175 years has really transitioned and moved to different areas of focus. Start off as a transportation company in freight forwarding, then moved to more travel and lifestyle focused, then became a financial services supermarket, and now really honed in and focused on payments for the last 20 years or so. And done really well at that.
What has kept you entertained for this last almost 4 decades?
Well, in my tenure, I've had 15 different roles. I'm on my 15th job. So it's not like I've done one thing the entire time.
Yeah.
So I started off in marketing. When I first joined the company, I spent time in working our consumer business, working at some parts with college students that were getting American Express cards. Another time working with the high net worth individuals, platinum card members. I worked in a small business group, a small business franchise. I worked with corporate clients, with merchant acceptance, with bank partnerships, so technology, a lot of different roles, and it all kept me interested.
Let's talk about your most recent role, where you were the CEO of the American Express bank side of the business, which represents, it's about 60% of revenues for the company.
That's right.
So you were probably top 5 most important exec in the company at that point. And so you learned a lot, you had a lot of influence. Help us understand the banking business, and also how is it different than a traditional bank anywhere in the country or in the world?
Okay, so American Express National Bank is now a top 25 bank by assets in the United States. But because we don't have any branches, and don't run commercials and don't do billboards, many people may not be familiar with it. But the ones who do know are the card members, because most of the customers, not all, but most of the customers of the bank are card members. And American Express has always had a banking license and a bank that we work through in order to fund some of the activities of American Express. But it really got a lot bigger during the global financial crisis. If you remember, during that time, you were seeing banks that were disappearing and went out of business or had to be acquired. And there was a concern with access to capital. And people really were unsure during that period. And what we found during the global financial crisis is just by creating high yield savings accounts or certificates of deposit, that there were customers and some Americans who said American Express has been around for, at that point, over 150 years. And they're very safe and secure. Their whole brand is built on trust and security and service. And so I feel comfortable giving them $10,000 or $20,000 or $30,000 to put aside in the savings account at a reasonably good interest rate, because they will be there. I believe they will, even in a rocky time, American Express will survive and persist. And so that was what we started, and it became a source of capital for us to run our business. And you take fast forward over the years, it's grown every single year to the point now we have over $100 billion in high-yield savings accounts, mostly from current customers who have a consumer, a small business, or their account with us, but not exclusively. And so it's a very important part of the company, but it's a digital bank, again, with no branches. And so because of it, it's not widely known, but it's very, very important in the U.S. banking system and to our company.
How old is the bank?
That's a good question because we've had multiple versions of it. We've always had a banking license. We took two different banks and put them together. But the growth of it has really been the last 10 or 15 years to get to the scale where it is now.
So I was going to talk about this later, but you mentioned the global financial crisis.
Yes.
You, in your career, you've really navigated, especially in senior roles, three major crises. Maybe you tell me you look at it differently. Maybe it's more. But it's the dot-com crash, it's the GFC, and COVID.
Yes.
What was going on inside the house within your team when you were going through it? And why did Amex come out even stronger? You know, you told us a little bit, but let's dig a little bit deeper.
Well, you learn a lot through history. And for most of the, not most, but for a number of the senior leaders of the company had been with the firm for a long, had been through those three things you mentioned. You mentioned the dot-com crisis. We referred to it as 9/11 because our world headquarters was across the street from the World Trade Center.
Basic.
And so remember when that happened, which was a long time ago, our world headquarters, we had to immediately evacuate and no one worked in that building for 11 months. Okay, so think about that. I mean, everyone left the building and no one went back to our world headquarters for 11 months. That happened in an instant. The country was in the middle of a recession. And there was a time period where all the airports in the United States closed down for a few days. And at that time, we were the largest travel agency in the world, right? So we went through that period. I remember our stock price going down dramatically and people really wondering how American Express was going to survive. We made it through that period and thrived. The global financial crisis was another tough period because we're in New York and there are many New York headquartered banks that went out of business or had to be purchased. And that was a really tough period to go through. And so when the pandemic started, the pandemic came about and we got together as a management team and said, how are we going to get through this? We relied on a playbook that we had developed, a recession readiness playbook in terms of the crisis and principles and things that we would do. And we went directly to that playbook and said, now that things are tough, here are some things that we won't do and here are some things that are really important. And so, for example, with all of our colleagues, we said during this period, we were not going to have any layoffs. We were committed to that. So in the year of 2020, and the pandemic began early in 2020, even though they may not could be able to come into the office or may not be able to do their role, we kept them on the payroll. That first year, we were committed to supporting our colleagues to see how things would persist. And when it comes to customers, we were thinking about the long term, about how can we maintain healthy, strong relationships with our customers that could go through that difficult period and get to the other side and things would get back to a normal place. So that was important, maintaining relationships with them. And then the other thing we thought about is what could we modify in our business model to make ourselves stronger on the other side?
On the playbook, so when a recession hits, a lot of credit companies tighten their underwriting standards and their credit box.
Sure.
Others go on the offense during this time because they know that's a great time to expand. Obviously, with underwriting parameters and all that. What has been the approach of Amex?
Well, we focus on customers and on long-term relationships. And so we knew there was a difficult time and many consumers and small business owners couldn't pay their bills as they had been because their revenue or their income had dried up in that period. And so we developed something called the Financial Relief Program. And we said to many customers, listen, we realize you're going through a hard time. Your bill might be X, whatever it is this month, $10,000, $20,000, $50,000, depending on if you're individual or business. And we know you can't pay it in full right now. However, here's what we'll do. If you can commit that you will make sure you pay us every month a portion of that for the next X number of months, 6 months, 12 months, whatever the parameters were that were agreed to. There were stipulations in the program that we would maintain your account, right? Not report your delinquency to a credit reporting agency because you're still paying us. We will freeze your ability to and limit your ability to spend because obviously you have a balance, But once you can pay that balance in full, they will fully restore your card spending privileges, your relationship with us, and we move forward. And that was very different than what a lot of other financial institutions were doing. They were cutting lines and cutting cards very aggressively. So we were able to maintain relationships with more individuals and more business owners. And that was important for us. Now, not every single person signed for that program paid in full, but a majority of them did. And for those that we did support during that period, they became very, very loyal to the company and the brand.
It's probably a good time to talk about your loss rates at Amex. You had famously extremely low loss rates. Is this due to the customer segment that you serve, or is this due to your risk management at the company?
Well, I would say it's not just one thing, but there are a few things that do help. Yes, we do have customer segments, whether small business owners or consumers, that have a track record of spending and paying their bills well over time, whether with American Express or not. So that's helpful in terms of the people that we have selected to approve and the people who gravitate towards our products and willing to pay a fee for most of the products. So I think that's important. I think our business model is such that we have information on the card member level and the card members' activities, and also the merchant that accepts the transaction. So we see information flowing on both sides. And so where you make a transaction, what day and what time and what location are all things that factor into your likelihood to repay, when there's fraud or not. And so the business model. And then there are a lot of colleagues within the company that would say that they are brilliant, they are excellent, and they have unique skills and modeling capabilities that help devise ways in which we can manage our risk best. So it's a combination of all those three things working together.
I think those of us who travel, especially to smaller markets, emerging markets, we can remember a time where our Amex or American Express in general would be accepted at airports, but not necessarily at the restaurant, in a small market. That has definitely changed. I'm definitely a customer, and I can tell you that when I go to, let's say, a place like Mexico or Brazil or somewhere in the Middle East, most of the time my Amex gets accepted. Right?
That's great. It's good to hear.
You at some point you were leading global merchant expansion.
So it's for one of the roles I had, which I did different variations of for about 10 years, which was being responsible for all the places that accept American Express worldwide. And you're right. I saw that as one of the most important things we could do as a company is to expand the acceptance of American Express around the world. So you as a card member, whether you're a consumer or a business owner, would feel more comfortable using your card and pulling it out and traveling on your trip, knowing that you could be able to do the transactions you wanted to do. So that was one of the most important things. And you mentioned a few countries. We have different models. So there are some countries, like say the United States, where we are today, where we have our employees, our colleagues that are responsible for driving acceptance in this country. Right? You have other countries, you mentioned Brazil, where we have an outsourced model where we have partner bank partnerships, where we don't have Amex employees in those markets driving. We have licenses with 5 or 6 banks that are there and merchant acquirers, and they're responsible for issuing the cards, doing the customer service, doing the marketing, but importantly, signing up places to accept American Express in that country. So that's an outsourced model. And then you mentioned the Middle East, where we have a joint venture with a JV with another entity that's based in Saudi Arabia that's responsible for the Middle East, and they handle merchant acceptance there. So those are 3 different models. But I would say that one of the things that we did, and I would say the pivot, there's 2 different pivots that we made at that time that made a big difference for us. One was to decide that we would work through partners aggressively, payment facilitators and aggregators like Stripe, like Square, different ones that are large, and Klarna, others around the world that would sign up merchants to accept all credit cards. And we wanted American Express to be part of that bundle that they would offer to merchants. And being a part of that bundle and a part of that offering that would come from the partners and acquirers really did make a big difference for us in terms of expanding our acceptance. So I think that was one. The other is by really focusing in on the locations that matter to current customers, where customers live, where customers work, or where they travel to. And we aggregated all the data from all of our card members globally, went back over a few years and said, what are the places that people attend to do transactions? And let's make sure that we can cover those places, really thoroughly, and focusing on industries that maybe people wouldn't think of from American Express. Think of places where you transit. Think of buses and trains, not just airports, right? Is really important. Tubes, railways. And I think that's really important. And then also where people could eat, but not just restaurants. It could be a truck, it could be a coffee shop, it could be a stand, it could be a vending machine. Anytime you want to be able to eat while you're on the road, we want to make sure that you can use your American Express card to pay. So there are things like that that really alter our strategy, which expanded acceptance greatly.
You were following your client at the most micro level.
Yes, that's important. In an aggregated way, not an individual. We wouldn't say, where is Miguel going for vacation next summer? But we would say customers who have this profile, when we aggregate them to thousands or millions, are more likely to go to these 50 or 60 locations. So let's blanket those places in the world.
When you think of kind of the major markets that the company serves today, how have those changed over the last kind of few decades, right? How have some markets become more important than others?
Globalization is true. And people travel now more in 2025 than they did when I joined the company in 1990. It's a long time ago. And then there's some destinations that become more popular. Like Thailand is one of the most traveled locations in the world, one of the top 10 cities that people travel to, or countries. And going there is important. So for us to have relationships, to be able to build our acceptance in that country that's growing its importance in global travel is a big deal. Paris and France has always been one of the top 10, so we knew we had to work harder there. But there are different destinations that have changed over time.
So it's an iconic brand, Amex. And many people, I'm sure, think they understand the company. What is one thing that most people miss about Amex, but you think is important to voice?
Well, most people today will think of American Express as a payments company, as a credit card company. And then there are others who may think of it as a travel company. What they don't realize is the company is 175 years old. And during that time, there are different iterations of where the company focused most. And so the company's always been about customers, about ways in which we can serve them, and being innovative to deliver on things that are important to them. And that's changed. And I think that's a critical part of the company's DNA and the way people think. People may not have thought of dining as the most important category, but what we realized over the last 10 years is that dining has become increasingly more important. Even post the global financial crisis and the pandemic, we see people are using their Amex cards to pay for restaurant and dining transactions more than they did historically, right? And sometimes it can even be food delivery services like DoorDash. And so we thought it was important for us to be able to create some capabilities and some enhancements and some benefits for when customers want to dine, whether it's in a restaurant or whether it's a delivery service, we can get some benefit by being an American Express card member. And that's what led us to make the investment in the beginning in Resi.
Clubbing, as in going out to a club to dance, that is being replaced a little bit or a lot by dining,
Yes.
by going to
Yes.
the restaurant, and then
That's right.
there's no clubbing after that, which is kind of crazy. 175 years, how did the company get started?
It was a freight forwarding company founded by three gentlemen, two of which are named Henry Wells and James Fargo. And it was about forwarding freight from different cities in the U.S. at the time, from 1850 from New York or to Boston, or New York to Philadelphia, or maybe in some cases getting across to San Francisco, right? And also protecting customers, and for them trusting us when they can give us their goods, and that American Express would get them there, and if not, then we would pay to replace them.
I think it's very interesting.
And that's how the company started. It had nothing to do with payments, right? Nothing to do with cards. Didn't exist. The first Amex card didn't exist till 1958. The company was over 100 years old by that point, right? So the iterations of how we've grown, but the consistency, trust, security, service have always been the hallmarks of the company's brand.
To me, it's very interesting that a lot of the largest financial institutions of today, who were started, in the 1800s started by helping create trust in the trading business.
That's right.
Imports, exports being within the same country or abroad. Amex is no exception. Amex is distinctive for a lot of partnerships. You've just mentioned a JV in the Middle East, partners in a market like Brazil.
Correct.
Fintech is oftentimes a lot about partnering, right? A lot of the fintech companies that we have invested in at Gilgamesh Ventures, or just that are out there in the market, they're very successful. Their entire business model is partnering with established financial institutions.
That's right.
I know you're a believer in the fintech industry.
I am.
Maybe tell us about how you've seen this aspect of the industry evolve and how you think about partnerships between fintechs and banks.
Okay. I think it's really important for large institutions to both partner with and respect fintechs and startups. I think it's critical. I think there's evolution in business that happens and innovation that comes from some of the smaller companies. It's not that the larger banks or institutions can't get to it, but sometimes it's more difficult because of the regulatory environment and some of the constraints they have about how fast they can move. And then other times it's by being big and then seeing someone small come in and find a little niche that works well for them, right? And focuses on one or two things for a customer segment and does it really, really well that we can learn from. I just think back on my time in leading a merchant acquisition, and there was a small company that was founded called Square that created this little dongle that you could plug into your phone that could enable credit card transactions. And I thought that was really, really innovative. And maybe American Express could have done that ourselves because we had merchant terminals and we had direct relationship with merchants, but for whatever reason, that's not something that we went after. But this company pushed on that one thing and said, we want to enable people to do this instead of cash in order to be able to put payments on their card system. And we ended up partnering really closely with Square early on because what we found is they were signing up merchants that we might not have ever gotten to. And they were creating merchants, right? People who were used to paying with cash, right? And that really did expand payments in the United States and in other countries. And we thought that that was aligned with what we wanted to do. So we partnered with them. And I think that's one good example of a partnership where there was a fintech, they had an idea and a concept that larger companies weren't doing. They focused on that one thing. They served a customer segment that maybe others weren't focused on as much and created demand. And then it expanded it and turned into a much bigger and different company.
For founders selling to banks or large financial institutions, what is important for them to keep in mind?
I think first being focused on your customer segment and what you do and where you have differentiated value, I think is the very first thing you should do. It's not worry about who you can sell your business to and partner with. Worry about the service you provide to customers and how you could do so in a way that's better than a larger institution. That's what I would say is first. I think the second thing is to realize if you're going to partner with the larger institution, they're probably going to have different constraints. And you have to figure out if that growth that you would get by partnering with them, that you can, if you can comply with some of the constraints that might come along with it, right? So it's a balancing act, but I think that's important.
Yeah. Speaking of the market, everyone today is talking about the Capital One Discover.
Yes.
It's not a merger. It's Capital One is acquiring.
I see it as an acquisition, but you can call it whatever.
So it just got approved. It's probably gonna be final, and the ink will be dry in a few weeks.
Yes.
How is this gonna change the market? What are your thoughts?
Well, Capital One and Discover, both two companies that American Express respects and ones we track. We see them as competitors, not necessarily as partners. And they're joining together. But the truth is, it doesn't really change the strategy for American Express at all. We respect them. We know what they do. Our customer segments don't fully overlap. There are a lot of businesses like student loans, other things that Discover's been involved in, or segments that Cap One may lend to that we don't lend to. So it's not like a direct companion on everything.
What is the Gen AI Council at Amex?
You've heard about that council.
Yes, I did my research.
Okay. Well, the council, once generative AI became a thing, a concept that was being talked about more broadly, maybe 2.5 years ago or so, American Express wanted to participate. And I thought that we could leverage this capability these large language models to provide better service for our customers and to improve our products and our capabilities. But before moving into it, there were a lot of concerns that everyone in the industry had. It's not just within American Express, about hallucinations, about data security, about privacy, about a lot of things. And so we put together a council, which included people from our privacy team, people from our legal team, model governance, technology, just a cross-functional group of people that were senior leaders to make sure that any move we made in generative AI, that we were checking the right boxes and doing so in a way that we could protect the long-term interests of our customers. So our information, their information wouldn't be compromised, that we'd make sure we handle the model governance in a way that our regulators would be proud of and would approve, that we maintain privacy of data. So we had to be very thoughtful about everything we did. So that council was very important.
How do you make sure that you don't stay behind? Because arguably the gap of technology between startups and legacy is becoming wider. Now with this powerful technology, it's like a 10x jump from where we were 5 years ago.
Mm-hmm.
And so if you're starting from scratch, you don't have any technical debt, you can implement all this beautiful technology. Whereas, if you're 175-year-old company,
Mm-hmm.
maybe not all your systems talk to each other. Maybe you can't always tag the right data. How do you ensure that you overcome that and you're actually able to implement this new technology?
Well, that's why the Gen AI Council that we have within the company is really important, because that is the mission. It is to enable us to move quickly, to leverage new technology, but also to be able to build capabilities that will better serve our customers and create new services. And I think that was important. So that's what we were focused on, taking all the customers and the heritage and the big business that we have, and then how can we make it better, right? So we found places that we can leverage it in our technology organization, all of our software engineers, enabling them to be able to use a tool that could, a coding assistant that would help them be more productive in a self-reported way across thousands of people. And we said that there'd be 10, 12% increase in productivity. I mean, that's really helpful, right? Or from our customer care professionals that service people to be able to get access to information quicker, to be able to answer a question when a card member calls or when a card member chats with us, to be able to answer that question more quickly is, enhancing to our business. So we just tried to find use cases. We had over 500 use cases that we were considering, but use cases that we could test, see if they work, and if they do, then scale and have a broader adoption that can impact the business.
Are you a believer in that we're going towards a future of a more personalized banking at the individual level?
I think we have the potential to. I think it's up to financial institutions to deliver on that potential. I think what people are talking about is what could happen. What we have to really think about is what are people actually doing to make that true, right? So how is the experience being improved when you go to a branch? Or maybe you don't need a branch anymore because you can do things in an automated way, right? I think it's just a transformation. Just as when ATMs came about, did they help or did they hurt? It depends on which angle you looked at it from. But I think generative AI can enhance servicing, has the potential to make things easier for customers, can deliver more personalization if it's done properly. But sometimes people are just looking to cut costs. And I don't think that's necessarily enhancing for a customer if a company is just focusing on cutting costs.
The market is always changing and moving. Compared to when you started your career to today, when it comes to risks that a large financial or a fintech should be aware of, should be worried about, what are some of those risks that you think about when it comes to our industry?
Okay. I think about the heritage of American Express, about trust, security, and service. And I think about technology, which enables quick access to information. But there are always, I think, debates that we have sometimes with partners about whose information and data is it? And then how do you maintain the privacy? What things are you comfortable with sharing? And what things are you not comfortable sharing? And the customer should have some input into what data is shared and whether that makes their life better or not, right? So, for example, you sign up for the Resi restaurant app. Well, it would be helpful if we had recommendations to you of what places might be good for you to dine in. But if we had a history of where you dined before in all of your transactions, that could make it better for you. But you should be the one to be able to determine what information you share and whether it makes it better for you. And I think that's going to be a constant struggle, I think, in financial services and also in privacy is information. What's shared, when, where, and how? Is it for the company's benefit or is it for the consumer, the customer, the business owner's benefit?
You mentioned Resi and obviously traveling a bunch of times. Do you have any favorite Amex Rewards experience?
Actually, I do. I have membership rewards points, and we have the ability to be able to, and for all card members, to be able to go online, look at your statement, and select charges you can pay for with your points. And so every now and then I'll go on my statement and I'll treat myself. I'll say I bought these pair of shoes or I bought this sweater or whatever it is, and I'll pay for it with points. And so that's really nice. But what I actually think is one of the best things is when business owners who have a small business or a middle market size account and accumulates a significant amount of points based on their purchases, and they use their membership reward points to be able to thank or reward their employees. I think that's one of the best things. I love it when there's a business owner who says, hey, we had a holiday party and I went in and cashed in some points and I had gift cards and some things I purchased and I gave things to my employees at the end of the year. That's really nice.
So talking about your career at Amex, I did a little bit of research and you are known for actually going the extra mile to develop talent within the company.
Yes.
Sounds like this is close to your heart. This is something that's close to your heart.
Yeah, it's personal to me because I know the difference that an individual who cares about your career and development can make in your outlook on your business and on life. One person either could help you or can discourage you based on your interactions with them. And it really does matter. Because I started the company as a summer intern and I was a nobody. And for the first 4 years with the company, no one reported to me. I was the individual contributor. I saw and watched and learned a lot. I think you learn from leaders who are not very good and you learn from leaders who are excellent and who motivate you and give you energy and help you get better. I've seen organizations and teams that are high performing because people are passionate, they love the leader, they like the challenge, they feel like someone's got their back that's helping them get better and teaching them new things, and exposing them, but also investing time in developing them and how that team works. And also a team that can be demotivated by a leader who doesn't do that, who doesn't support their people or doesn't train them or develop them or have their back when they need it. And so really trying to help people be the best that they can be individually, and also leaders to realize the responsibility and the power they have to impact others.
In your mind, what is the definition of a good mentor?
A good mentorship relationship is one that goes both ways, I think. People always think about, well, if this person would mentor me, here's what I can get out of it, right? But I would always ask them, well, what does the mentor get out of spending consistent time with you? Why should they do that? That's a drag on their time. Why would they spend that time? And so if a person wants to be a mentee, should also think about how they could potentially help that mentor. And then it's a mutually beneficial. Now, it might be 80-20, but it's not 0 or 100, right? I mean, they may obviously have more to be able to help. So I always try to encourage people to think that way. And then the other thing is, a lot of times people think of a mentor as someone who is more senior, who has more experience. But that's not always the case. One of the most impactful people in my career, and I've had many people who have been helpful to me over the years, but one person who's really impactful was a person who was an executive assistant, right? So she didn't have any direct reports. She'd been at the company for a number of years. She's worked for the senior leaders and had seen a lot. And just one day, she just pulled me aside and said, young man, you seem to be working really, really hard. I've been watching you. Here's something you should watch out for. Here's something you should make sure you don't do. Really, really helpful advice. I appreciate her for, just reaching out to me, because she could have just stood back and watched, but she gave me some really, wise counsel. And over the years, I've gone back to her and say, what about this and what about that? How do you see this? And she's always given me a good perspective. And no one would even think that this person is someone I would see as a mentor.
Did you always fight for those roles that you got, or were you surprised sometimes?
I've been surprised many times. I've always focused on doing the role that I was in as best I could and trying to make a difference and hope that someone would recognize the contributions. So there are times when there have been a few roles I've pushed for. That's something I really want to do if you give me the opportunity. But then there have been more times when I've been asked to do something that someone thought that maybe I could be helpful.
Someone who has become important in the fintech and VC industry is Ken Chenault,
Yes.
former CEO of American Express.
That's right.
Maybe can you tell us a little bit about working with Ken?
Yes. Well, I've known Ken my entire career. And at American Express when I started. When I was in the summer intern, he was just a division president, right? He wasn't an iconic CEO when I first came to know him. We've gone the full gamut for someone who was an icon I looked up to, someone who ended up being the head of my division, someone who's the CEO of the company, and then someone who was my direct boss for a number of years. And now to see him as one of many impactful mentors I've had over the years. One thing he's always had, he currently does, and has always had a long-term point of view. He's always been, thoughtful and kind in his interactions. Whether he's giving someone, support for a new venture they're about to take on, or whether he's terminating somebody from the company. He's always thoughtful and kind in his interactions. And he was a visionary, I believe, because he was looking to partner with fintechs 15 years ago. Before he was saying, Amex is a big company, we can learn from these small companies. And he would go to Silicon Valley and spend time with them. I've had the opportunity to accompany him on a few of those trips early on, meeting some founders that went on to, build some really big companies like Airbnb or like Stripe that have thrived over time. But I think Ken was one of the ones who forged relationships with them early on.
Yeah, and I know from personal experience that he's raised a great family.
Yeah. He's very family oriented.
So to finalize this great conversation that I've enjoyed a lot, Anré, are there books you recommend often? Are you an avid reader?
I used to be an avid reader.
Yeah.
I've turned into an avid podcaster. How about that?
But
But one book that I did read in the past year that really stuck with me was called Shoe Dog. Shoe Dog, which was written by Phil Knight. And that's a book that I read it and it stayed with me because I'm a former athlete, former college athlete. I ran track in high school and in college. And I think, 40 years ago when I was a high school student, we started our team wearing Nike. And we were one of the few schools at the time that wore Nikes. I'm talking about the late 70s. And Nike was not this big, massive global brand. In the track and field running community were well known, but they weren't known in baseball or basketball or soccer or any other sport, right? Swimming, anything else. And I thought that I knew about the company because I started using it when they were not well known. And that was in the late 70s. Well, when you read the book, you find out that there was more than a decade before that Phil Knight had already written his business plan of what he wanted to do. And going through that first 10 or 12 years of everything he went through to start and build his company and travel to Japan and all the people he worked with. I think it's great for a founder, for an entrepreneur to read that book because it tells you what it's about and how you have to stay strong with your convictions and where he went for his first funding and the sacrifices he made. It was really, really inspiring. It's a great book.
what high school did you go to?
Oakland High School. I went to public schools in Oakland, California. That's my hometown.
And how about podcasts? You mentioned you're an avid podcast listener. Maybe one podcast you would recommend.
But I like Scott Galloway's podcast. He has several, and I think he's great. You could just Google Scott Galloway. Several podcasts will come up. He has one that he does with Kara Swisher that I really like, and they talk about a range of subjects about the economy. Sometimes they drift and talk about individual people, but then they focus on companies and things that are happening in the industry, and so I just enjoyed it a lot.
Anré, can't thank you enough for doing this, and I'm glad we got it recorded in person.
Yeah, I'm glad we're actually from one Wharton alum to another.
Absolutely.
Thank you very much for
Absolutely.
including me.
Thank you so much.
Appreciate it.
The Fintech Leaders podcast is for informational purposes only and should not be considered financial or investment advice.